The top business stories live from the Sky Newsroom. The EU suspends its retaliatory tariffs against the 21 billion euros of US imports for 90 days in the hope of securing a win-win trade agreement with Washington. Meanwhile, the Prime Minister focuses trade talks on cutting the 25% US tariff on British cars. Plus, US egg prices increased to a record high despite President Trump pledging to bring them down during last year's election. Very good afternoon. Welcome to Business Live on this Thursday with me, Darren McCaffrey. The EU has suspended its retaliatory tariffs against the 21 billion euros of US imports for 90 days in the hope, it says, of securing what it calls a win-win trade agreement with Washington. The move, of course, follows President Trump's decision to pause tariffs yesterday on most countries that were additional to a universal 10% duty that will remain in place. The European Commission President, Ursula von der Leyen, said that the EU wanted to give negotiations a chance. Well, let's speak to Vicky Price, Chief Economic Advisor at CEBR. Vicky, very good afternoon, as always. Just talk us through the rationale of why Ursula von der Leyen and the Commission have decided to do this.
Well, it's really interesting that the EU had said very clearly at the very beginning that it was going to retaliate, and they looked at a number of products. In fact, we had quite a lot of indications which products this would be and how big the hit might be. So it was indeed the 21 to 25, depending on which day you looked at, billion worth of goods that they were going to be attacking. But obviously, they hadn't put them into force. They were going to become effective later this week on the 15th of April, as far as I recall. And what Trump has said is that he was going to reduce all the extra tariffs that people were going to be paying. In fact, they had become effective for a few hours, as you remember, on the 9th, back down to the basic 10% for everybody while negotiations were going. And those who would be seeing the benefit of that were those that hadn't actually implemented any retaliatory tariffs yet. And that included the EU. China, of course, as we know, already had done so, hence why that trade war between the two countries has intensified. But the EU had not. And of course, it is in the interest of the EU to try and have a trade agreement. What we understand is that even before those tariffs were implemented or announced and then implemented for a short period by Trump, they had gone and offered to have all the industrial goods coming into the EU from the US at zero tariffs. And that was ignored. They weren't the only region or country that had gone to offer things which were completely ignored when that board was held up with all those tariffs attached to it. So it's interesting that now we're going back to basically where we were a few weeks ago with proper negotiations with a bit of black starter.
And do you think what's gone on here is that maybe the White House have been surprised by just how far China's been prepared to go and realise that, frankly, they can't afford a global trade war with the world's second largest economy and at the same time the world's largest trading body in the European Union?
Perhaps. I think what they realised is that they were heading for a recession. I think that was the main reason why they backtracked a little bit. And of course, if you look at the markets right now in the States, they're coming down, or they have been coming down in the last few hours because they're worried about what the trade war with China actually means. Because here you have two very large economies, the largest economies in the world, fighting with each other. And if either of those slows down, because trade, of course, will be affected if that continues, then the rest of the world slows down. And that has then indirect implications back in the US. Hence why we have seen actually those bond yields go up in the US. And the real concern that what we were looking at was probably a fall in GDP happening in 2025. He didn't like that. He had to do something about it. And that's why he's backed down rather than anything else. And I think he's probably keeping his fingers crossed that there could be some improvement in the relationships with China as well. Now, who's going to blink first is going to be the question.
What has the EU got to offer? I mean, we know that one of the demands of President Trump is to take more US oil and gas.
Yes.
But where is the landing field, if you like, for any deal? I mean, when the EU talks about a win-win, what does that look like from Brussels' point of view?
Yeah, it's interesting because actually what the EU has already offered, as we understand, is to take in 300 billion worth of LNG from the US a year, which of course, they've been taking quite a lot of LNG, given the issues that have been with gas supplies from Russia. The US had done rather well in terms of its exports in LNG. And the expectation was that would be reduced in the future. But now the EU is saying that actually, we're prepared to take more, despite all the environmental issues that may be linked with that. So there are concessions that can be made. What the EU obviously hopes for is particularly the car industry. I mean, unfortunately, with those reductions in the tariffs that we have seen announced so far, or at least the pausing of the additional tariffs, which would have meant an extra 20% for the EU. You still have the 25% tax on tariff on cars imported from anywhere. And of course, the car industry is hugely important for Europe, particularly for Germany, which is the biggest country there. So they're hoping to get some agreement on that. But I can't see how Trump can do an agreement just with one region, one country, if you like, and not extend it across to also affect the UK, of course, with a bit of luck, downwards.
OK, Vicky, as always, thank you very much indeed. Vicky Price there with what the EU are doing. And we should note that actually the euro today has reported its biggest one-day jump since 2022. It's up 2% at the moment against the US dollar at $1.11. We'll have more in the markets a little later on in the programme. But despite that cooling of global trade tensions, US tariffs on China remain at an all-time high of 125%. So what does that mean for companies manufacturing in China? Delighted to say, in the studio with me is James Griffith. He's chief executive and co-founder of Mouse, which makes phone cases and backpacks. And James, very good afternoon to you. Thank you for joining us. Just give us a sense of what do you guys do? You're a British entrepreneur that's launched a company and made a success of it.
So you might, people might know us from seeing us throwing phones outside the Apple Store, or backpacks out of helicopters, or now luggage out of hot air balloons. And we do that by pushing the limit of our products. And we actually first did that by learning how to develop products ourselves. And we did that by actually moving to China and living in China next to factories. And actually, Will, one of the co-founders, is still in Asia. And so we actually managed to build that expertise in-house to produce fantastic products that perform in our content.
And is your point, because, there'll be a lot of people saying, why do we, it's not just you, but lots of companies manufacture in China. I mean, the natural assumption is it's because it's cheap labour, and so you're able to do it more cheaply than you can do here in the UK. Is that fair?
That's not really correct. So the misconception is that basically labour is cheap in China. Now, it may be cheap, even before I was born, most probably, but now actually China has got quite expensive labour costs. The reason why people often manufacture in China is because many years ago, when the West started moving to finance and services and software, we lost kind of the know-how, the supply chain, the talent, the infrastructure to Asia. So it's actually the best place to find talent. If you wanted to kind of fill this studio with tooling engineers in the West, you most probably wouldn't fill it. In China, you'd fill it with football fields.
OK, so there is a rationale for being there. What does that look like, given these tariffs then, James?
Well, so...
I mean, it's obviously a lot tougher.
For us, I mean, for once, it's actually good to be a UK business. I mean, we've had Brexit, even things like COVID, there's winners and there's losers, OK? So in COVID, the winners were online business and the losers were offline business. Now, for us, being a UK business, a lot of our sales is actually in UK, Europe, and rest of the world, whereas a lot of our competitors are actually US businesses. And the US is 8 times the size of the US market, so they have a lot of business in the US. So for us, actually, we can actually take this opportunity to be more aggressive and get market share.
And at the same time, you do export, as far as I understand, from China directly into the United States. That means those products become more expensive. Is that something that you still think people will be prepared to pay for? Or do you think that actually you're just going to have to be a lot less focused on the US market, if you like?
So for us, we're a direct-to-consumer business. So we don't sell to distributors that sell to retailers and then the consumer. We sell direct-to-consumer. So that gives us more levers to optimise for profit. And so, for example, maybe we'll spend a little bit less on marketing. But we have quite a lot of margin versus our wholesale competitors to adapt.
But just in essence, if it came down to it, would you ever consider moving out of China if there were lower tariffs in other countries nearby? I mean, there's lots of talk about Apple, for example, increasing its presence in India. Would you even consider maybe manufacturing bases in the United States? Because at the end of the day, Donald Trump would argue that's what he wants to see.
Yeah. So back in 2022, we made the decision that we were going to be making our backpacks and our luggage outside of China. So that's what we've been doing. So it's only our phone accessories in China. And actually, we need to not be hasty because we don't actually know what the tariffs are in China or any of the neighbouring countries. So we really need to know what the tariffs are, not what the threats are, so we can make those calculations. When we know, we will choose the best country to make the best products because our customers just want the best products.
OK, as you said, there's a lot of uncertainty, and that is a big part of the problem. James, thank you very much indeed. James Griffith there. His company's called Mars. Thank you very much. Now, let's bring you up to date with the rest of the business news this afternoon. And US egg prices increased again last month. That's despite Donald Trump's pledge during the November election to bring them down. Experts were anticipating a drop in retail prices following a reduction in the wholesale prices, but they've reached a record high of $6.23 per dozen. Two iconic Italian fashion houses are set to join after Prada announced it will buy Versace in a cash deal valued at nearly £1.1 billion. Capri Holdings, which owns Michael Kors and Jimmy Choo, bought Versace in 2018, but have been struggling to sell the brand's bold, colourful patterns. And Tesco plans to slash a further 500 million quid in costs as the UK's largest supermarket tries to offset the blow of the Chancellor's tax increases. The chain said it faces a £235 million increase in its national insurance contributions and that the cost-cutting measures would ultimately result in job cuts and higher prices. And don't forget, you can get more on that, indeed the rest of the money news on our Money blog. All you need to do is scan that QR code that you can see on your screen right now, and that'll take you to the Sky News app. OK, let's have a look at how the markets are doing this afternoon. First of all, let's have a look at the Nasdaq. Now, it's actually down after a big rally yesterday, down more than 4% this afternoon. Bit of a hangover, maybe, in many regards from what we saw yesterday. Meanwhile, here in Europe, things have been a bit more positive. As you can see, the main indices have risen. That's been mainly driven by big car manufacturers such as BMW, Mercedes, Renault doing pretty well, as well as European banks today following that decision by both President Trump and then the European Union not to get in too much of a retaliatory tariff war. And here in London, the FTSE, which has been closed now for about 50 minutes, is up 3%. It again driven in part by manufacturers and to a degree by pharmaceutical companies that had a very bad day yesterday. Well, let's speak to Scott Kronertz. He is from Citigroup and joins us live now from California. Scott, very good afternoon to you. Just talk us through what's happening in the US at the moment. We saw a big boost yesterday, maybe a little bit of a hangover today, things bubbling around a little bit negatively this afternoon.
Yeah, I think your hangover comment is spot on for what's happened here. Obviously, we had a major sigh of relief move yesterday on the news of the moratorium. And I think more importantly, with the moratorium, a path to negotiation on these broader tariff effects globally. Now we're looking at, a ongoing saga here where we'll see much more on the country-specific side. While at the same time, we're having to weigh what's happening on China tariffs. But all told, what I would say here is that the S&P 500 in particular was going down a path where, as you try to model in a lot of the tariff risks, to a certain degree, yes, there's an economic read-through. To a certain degree, yes, there's an inflation concern. But we've been concerned for some time now that it's really going to be a margin issue for many companies. And so the higher go the tariffs, so go the potential pressure on gross margins. That comes at the expense of index level earnings expectations.
Yeah, because, let's just choose Apple, for example. It's almost a good example in all of this. At the end of the day, it's pretty unlikely it's probably going to move its manufacturing base back to the United States. And unless the tariff changes, its business model is going to be quite difficult going forward, or else US consumers are going to have to pay a lot more for their iPhones, their iPads, and their AirPods.
So that's spot on, right? And so trying to model that, though, is very tricky. If you're an analyst or an investor looking at that stock, you still appreciate the value of the franchise. But, one of the discussion points that we've been using for some time on this tariff discussion is we're going to find out pretty quickly, whether it's backpacks and iPhone covers or iPhones themselves, where your price elasticity of demand sits. Namely, okay, you tried to pass through incremental tariff costs. How much is your end customer willing to bear, right? So the way we've been thinking about this is, here come the tariffs. We expect that a U.S. manufacturer will try to get some concession from a supplier. Got that. We'll then try to take the remainder, pass it through to their end client. We'll find out pretty quickly whether they can pass all or some of it through. And then in between is essentially some area here where the company's going to have to most likely take a hit to margins.
Yeah.
The other side of pricing it through is that you might be able to hold price but sell fewer units. Same issue. You end up with a margin issue.
And Scott, I'm just reading Janet Yellen, of course, the former US Treasury Secretary, has been saying that she thinks what's happened in the past week has been the worst self-inflicted wound by any administration on what she branded a well-functioning economy. And my bottom line is that isn't the fundamental problem here, that Donald Trump has changed his mind, let's be frank about this, yet again, but that's not likely to change. I mean, the whole point of this administration is that it's going to be changing its mind a lot, that it's going to be quite volatile and reactionary, and that's fundamentally just bad for business.
Investors don't like uncertainty. The nature of the stock market is you tend to sell uncertainty, then you buy the alleviation of the uncertainty. We were looking at a maximum, point of uncertainty post the Liberation Day news from last Wednesday evening to yesterday. You got a relief. So this volatility dynamic around policies is certainly part of the puzzle right now. And, it's difficult for investors, but it's also difficult for corporates in terms of how they think about their longer-term investment spending plans. So this uncertainty that is so prevalent certainly is going to persist. And then trying to assess fundamentals in that context is a more difficult issue. It's fairly unique in recent years, that's for sure.
OK, Scott, really appreciate your time this afternoon there from Citigroup. Thank you very much indeed for joining us on Sky News. OK, you're watching Business Live. Coming up in just a couple of minutes, Sir Keir Starmer turns his sights on those 25% tariffs on UK cars as the EU and the US de-escalate trade tensions. More on that in a couple of minutes.
Here we go.
2, 1.
You, Sophie.
The big
announcement, the battle for number 10.
The drone is above us.
It is a chaotic scene.
They've asked us to leave.
It was a clear Labour landslide.
The car is covered in.
Liberated but left in ruins.
A major incident has been declared.
That's when misinformation floods the zone.
It became clear the media weren't welcome.
These extraordinary images.
Must have taken years.
Who wants to talk about politics? OK, stand by.
I wouldn't be asking it if I didn't think it was a relevant question.
The winner of the 2024 presidential election.
Quite extraordinary events.
There's always more to the news than a headline. We want to discover, to delve a little deeper, to find out what's really going on. Explanation, analysis, the people at the heart of every story. I'm Neil Patterson, and this is the Sky News Daily Podcast. So, by the end, we'll hopefully all understand what's going on in the world just that little better. Available wherever you get your podcasts.
We're trying to see as much as we can.
We start with breaking news. An historic day here today.
The golden age of America begins right now.
A long-awaited ceasefire is now underway.
First question, Sky News.
This is a huge moment.
It's incredible.
Now to California.
Do you owe citizens an apology? Have you nothing to say?
Jane Secker, Sky News. Would you like to respond to us now?
Beth Rigby, Sky News.
In principle, would you agree to do that?
Criticism of you is banned. How is this a fair election?
The cameras are poised, waiting to see what the president might do next.
Thank you.
Thank you.
We are under Israeli military restrictions in terms of some of the things that we can film, but it's important to be in there. What a slow drive for the president as he approaches his golf club.
4 more years!
Free wherever you get your news. I'm Mark Stone and I'm Sky's correspondent based here in Washington, D.C.
We've got your Sunday mornings covered. From the front page and the sounds of the streets to the voices of the people who make the major calls and big picture politics beyond Westminster. We'll put you at the heart of our story. I'm ready. Are you? Join me, Trevor Phillips, Sunday mornings on Sky News.
We're rolling.
Welcome to the world.
Our new podcast, starting now. It's very exciting. Every week, we'll be reporting from the world's trouble spots.
We get to hold those in positions of power accountable, and we get to ask the questions that the audience, the listeners, want to know about.
And that's why it is so important that people tune in, come along for the road, come along for the journey. It'll be fun.
You want to talk business? Meet me in the On-Board Lounge. Fly Emirates, fly better.
Just to say that the S&P 500 at the moment down 4.2%, the Dow Jones down 3.4%, the Nasdaq down 5%. Quite a hangover, it must be said, in the United States when it comes to the stock market. But let's stay here now in the UK and talk about those tariffs that are going to be, or have been imposed on the car industry, some 25%. What can the Prime Minister, Keir Starmer, do about all of this? Let's bring in Lizzie Gilbraith, political economist at Aberdeen. Lizzie, very good afternoon to you. What can Keir Starmer do? Because these tariffs are in place and already doing some harm, I suppose.
Yeah, that's right. They're already in place as of this week. The UK is also, of course, subject to a 10% baseline tariff as well. But I think at the moment, the focus of the UK government is actually on that auto tariff specifically. There are a few things that the UK can look to do. We know that they've been interested in trying to arrange some sort of limited technology-based deal with the US to try and improve trading relations in areas outside of autos specifically, to try and bring up some goodwill into the relationship and try and offset some of the issues that the US seems to have there. But given that a lot of the specific issues that the US administration has around autos are not actually related to how the UK itself operates, it might be quite difficult for a specific bespoke arrangement to be made in this instance.
And it's very interesting, isn't it, Lizzie, that he's clearly has a very clear strategy, which is essentially to sit back and stay out of things and wait to see how things shake out, if you like.
Yeah, at the moment, the US is very much waiting for other countries to come with offers. They do seem to have given some indication for some countries about what they are looking to address as part of the negotiations, but it is very much at the moment up to each individual country to come to the US with an offer, and then for the process to be taken forward from there. And that in of itself, I think, is creating more uncertainty about the process and how productive some of these negotiations are going to be, because in a lot of cases, the US doesn't seem to have exactly set out what it's looking for in exchange for alleviating some of these tariffs.
OK, Lizzie, short and sweet, I'm afraid. We're going to have to leave it there. But thank you very much indeed, political economist at Aberdeen, Lizzie Gilbraith. Thank you. OK, that is it for me on Business Live for this afternoon. Coming up, we have got the very latest with the NewsHour mock Austin, including Donald Trump holding a cabinet meeting this afternoon. We'll have coverage of that. It comes as, I say, the main indices in the United States down quite substantially this afternoon now. I'll be back tomorrow morning, 11:30. Join me then. Goodbye.